Hello and welcome into this video here. So today we're gonna go over my March trades and how it's looking with the trade seller stats and how it's looking with my own journal here. So we go through the trades and we look at basically my Excel sheet too, how it's looking with the wins and losses, winning days and just the overall trading performance. So started off March here by let me just say first, we're going over the trades first, then we're going over the journal really quick, and then we can take a look at the trade seller and see how it's looking there. Basically, we started the month here off with a trade on the 4th. This was a Tuesday here, so we started off the trade with a good overextended breakout here. We know that the overextended breakouts, we need these higher time frame wicks like this that we have here. So basically the higher time frame was looking somewhat like this. Then we see the forward time frame coming up here, and we got a 30 seller here. So that's what we really went off with. And this wick here I pointed at is this wick here. So that wick is this wick here. So we have the higher time frame in order and we are ready to move up. So even though we're overextended here, we took this 30 celery with respect in the low here and basically keeping stops below a previous 15 range. So we had a 15 breakout, 30 celery, 1 hour breakout. 4 was bearish though, but it created like a doji candle. So we begin to move up here. We could see that the volume was high. So this I made here to the left is basically the daily looking like that. So this is the daily high up here. So yeah, was looking very good with an overextended breakout here to start the month off. Very, very good trade. Close full right here at 14.6. So almost at target. So close full right there. Next trade here was the same day actually in pre-New York. Johnny was holding up. Got a nice 15 celery here. So we saw that we begin to come up here, create support with this candle here. And after that support here in the 15-minute time frame, we saw that we already broke highs here. And now that we got this seller play here, now that we maybe were ready to take off, if you could break this previous high that was right here. So when we broke that high right there, the 30-minute was just looking like a continuation here. So basically just 30-minute support, 30-minute bottom wick here, and then breaking the previous high. And that was a 15-minute on the seller here. So 30 onion, 15 celery, 1 hour bullish, 4 bullish, daily bullish. So following trend, we just made a pullback here. Onion came up again. Yeah, very good trade. Another celery here. So this was taken on the 7th. So a very good trade here too. We saw that the move was going down here. We had a 4 hour that was bearish. We have a daily that was bearish too, as you can see here. The 1 hour was bearish too. So now that we see that all time frames are bearish, all the higher time frames, we could expect that if we get this 30 here, this is the 30 time frame. So the 30 here closed with an onion. So we see this move coming down here. I mean, we had this onion here, when we have this downtrend, I mean, all we're doing is basically coming down, creating a pullback here. And now what we're doing is right here, we're shooting for a lower low, potentially. So we didn't really go through here, but it's still the move that happened. So it's really good because we have an advantage point right here. That was a 15 support. I remember this. When we had that 15 support, we could say, okay, you can close it off full here, or you can go break even, take some partials because we were already down like 35 pips here. So very good trade, very, very simple here. Basically just a higher time frame bearish, and we taking an onion sell. So that was looking pretty good here. Another trade here on the 7th might have been separate accounts because usually wouldn't take, yeah, it might be has been separate accounts here. But this was the London trade here that we saw that we saw. Basically, this trade here went up like this right after. Filled all these wicks over here. That was a 4 hour wick too. So very good trade. We got stopped out by 1 pip, or I did. Some people took that trade and kept the winner and all of that, but this was a win in my opinion, man. I didn't mark it off as a win, but it's kind of a win in my opinion because that was like 1 pip here, and yeah, price just took off. So money about direction here, but the 4 hour just wanted to break that low one more time, and I was a part of that. So good loss though, because yeah, it shot up right after tapping TP out for 2 pips. Can't really see anything bad about the trade. Could have given it a little more room, but now I learned that. So that's great. Normally I don't see it, but I'm beginning now to put stops a bit below that low right there, or that high if I'm entering off a sell. So a very, very good trade though. Very good idea on all of that. Even though we had resistance over here, we counted on the higher time frame because this was the 4 hour high. entry of daily plus 4-hour high, and it was the previous 15. So we got a breakout here in the 15, saw that this could begin to move up if we broke the 4-hour high, and we had a 4 wick fill. Was looking very, very good here. But suddenly, yeah, that can happen. You know, it's trading, man. It's really just trading in a nutshell. So yeah, that's how it is. The 10th year took another trade. So that was a loss. The daily was bearish here. The 4-hour was doji. We were moving bearish, but we were moving bearish with like no top wick. So I guess this was the no top wick here, the yellow line, and basically, yeah, the 1-hour was bullish, 30 bullish, 15 bullish. So kind of a counter trend. Maybe this one could have been avoided if we looked to the left and saw this overall like resistance here. Because you know what I mean, like the daily is bearish, so the daily could have just, you know, been bearish like this and maybe going up again, giving that like a top wick or something and beginning to move down. So that could have been something. So we took the buy right here. But yeah, I can't really see the higher time frame for me here, but I know it's bearish. But the 4-hour was doji here, was moving bearish with no top wick. So really anticipated we could come up and make that top wick because 80 to 85% of candles have top and bottom wicks. So that was an okay trade. We could have maybe avoided that if we begin to look at these ranges here. Maybe take a look at them and say like, okay, maybe we could wait for maybe a second candle here. So like this one closing bearish, and then maybe the next one closing above here. Then we'd have this high to enter off. That was the 1-hour rebreak of high, I guess. The 4-hour probably beginning to move up after grabbing sellers, tapping support, breaking this high one more time, getting a new support, and closing above this overall level here. So I think that would be much better that we can move on with. Basically waiting for this one when we're too overextended without any higher time frame highs. So that first trade I talked about was basically an overextended breakout, but we love that we have that when we have higher time frame wicks, when we have these overextended breakouts. But here we didn't have any higher time frame other than the 1-hour time frame, and we were pretty slightly overextended. You could say like a celery here, but it already broke highs and all of that. So I think that could maybe be more of like a rejection wick instead of, or like this candle, the bullish one, could be more of a rejection candle than it could actually be like a, you know, candle that's beginning to move up here. But I think it was worth a shot. Definitely not A plus, but that was a pretty good shot at this trade here. Maybe next time could have looked more into the ranges and how the actual candle was looking. Maybe even have more patience waiting for this move that was happening right now, like a move down and move back above, and we could begin to mmove here. So the 11th year took a win. I remember this was in London here. So basically, London trade. We came up here, made a move with these candles here. We came down for a slight pullback, broke lows, activated sellers. That looks like a 4-hour low too there. And now we got this breakout here, and we could shoot for a high. So basically, it's just following the trend here, waiting for that perfect breakout here, and we didn't really anticipate anything on the first candle. So nothing here in the first one. This was even at London Open. So this was at 4 or something. So I can see here. Oh, this was a 3. Okay, so it was a 3. London Open, you see a 15 breaking out here. And basically what we're expecting is basically a continuation after getting this slight breakout with the breakout lows here. We have this overall support that was tapped. We saw everything moving up here. So we had a higher probability of moving up than not. Daily was breaking highs, 4 bullish. And we know that the 4-hour is major to look at when we have these sessions here because our session is one 4-hour candle almost. So it's almost like a one 4-hour candle. We always have the open in each session, so that's great. But yeah, this is very good. Tap support, broke lows, activated sellers, 15-minute breakout, moving in the high time frame direction with a lot of volume. Then we have this trade here at the 14th. So basically this was a winner too. And I remember this trade too. Yeah, that was in London. So we saw that we had a 4 high here and we saw that we had this clean range here. So a lot of clean range. Let me mark this up here. We had a lot of clean range. We had this higher time frame wick. We got the breakout right here, creating a perfect bottom wick for a stop, entry right there, and it's basically off. So around like 45 pips on that one, I think, for the whole range fill, and you could have probably held runners because this was all-time highs here. Very, very good trade here. Breakout, high time from high, we had clean range, we had volume, we had everything coming in here. So really, really good trade. That was a 3 a.m. too. Yeah, perfect breakout here. This was the 17th. This was my first NQ trade. I closed break even, so nothing really to look at. It was basically just a candle moving down, grabbing that low, kept steep stops on this one, and basically counted on that bullish one. But when I saw it close below resistance, I was like, nah, I'm not really that confident in this trade, so I just closed it off, and now I'm sample sizing this pair. So yeah, didn't feel so confident. Would have been break even, but close B. So 19th took this trade here. I actually think this could have been avoided too. So when I'm looking back at this one here, I'm actually looking at a trade where I think like, maybe I should have waited for range 2. Because this trade here, the daily was, yeah, I know the daily was bullish, the fall was bullish, and we have no top break on current. But when I look at this candle here, it was like, does that look like a good business partner for me? So I think like maybe next time, if you had a stronger candle here, or we begin to close above any of these levels here, like this, if we had this closure, that'd be much different because then we get a fake out here on the 15, even a stronger, like at this range here. Then we'd have a 15 fake out, we could take the buys coming up. But I think maybe price is giving us a sign here that we could begin to still move down when we had this weak closure and we actually closing below this range here. Moving forward, like the other trade I talked with you about before, that loss we could have avoided too because there was a range like this. The other loss we just discussed here. I think this one is similar because we really need to look like very like deeply into the ranges here because that really plays an important role in really, seeing, okay, is this bullish? Yeah, it closed bullish, the forward bullish, the daily bullish, but can we begin to move up or this candle too weak? So yeah, we had volume, yeah, we had all of that, but maybe this candle here, I can see it was at 430 too. So this trade was at 430. That means that London Open has already moved with this move down here. Yeah, I think slightly out of volume time, and really we gotta look at these ranges here, like see, okay, could we actually begin to reject here? Or are we moving up? I think it was not a bad trade. So it's not a trade I think was like bad at all, but definitely could have been avoided by showing more patience here. We even showed a lot of patience waiting for 430, so why not even, why not just call it a session if you don't like the price action here? And this is definitely something I will look more into because I actually don't like looking back. I don't like this candle here. So why wouldn't we just call it a session at 430? So that's the thing. But I think it's a great trade. I think it's a great trade, something to learn from. Actually, very good trade. But we have learned a lesson here. A lesson learned. So that's great too. Anticipation of the fall moving back up. 1 hour fake out. Yeah. Yeah, we had a 1 hour fake out too. That's it. So yeah, like it's tough. But I think the 15 was playing a major role here with the ranges too. This was the 19th too. This was pre-New York, and this was basically a fake out here on the 1 hour time frame. So we saw this range that was right here. We closed above with this candle here with a fake out. We broke lows first, activated sellers down here. And basically from there, it's just gone, we just came up, I've told full TP here at this top of the range. And yeah, that was it. So very good trade. My stops were below below the 1 hour low here. And basically only took it off the 1 hour. Daily was bullish too for bearish at support. So we tapped target on 4-1. Daily was pretty bullish. This was the 20th. So the 20th here, I took a position at New York Open. So we had this range 2 breakout here in the 30 time frame. And when we see this candle here at high volume time begin to open up and close above here, we could expect somewhat of a move like we saw before. So look at price action to the left here. We closed above, beginning to move. We closed above, we could begin to move, especially with a range 2, the 4 bearish at support. So the 4 bearish, we need a range 2. Sometimes we don't need a range 2 if we're right at support or the daily is bullish and we're right at support on the 4 or tap and target. But in this example here, I don't know how close to support or anything right now, but it needs a top wick, I said. So the 4 bearish, right at support, need a top wick. We tap target, needs a top wick still, as I said. This one up here. So basically, we can expect that this 4-hour candle will run its way back up after getting the range 2 to make that top wick. And I entered off the 1-hour high, 30 high, 15 high. So that was a really, really good trade. The 1 hour was closing, so we expected somewhat of a bottom wick. We got that perfectly. Stops right here, and an entry right here. Very good trade, closed off right here. I remember we had news, so I had to close. I wouldn't really hold through like like the other guys. Oh, that was nuts. But yeah, closed off. We had news coming in. Yeah, closed news were coming in at 8:30. About 30-minute range too. Yeah, good trade. This was the 21th, and this happened at 3:15. This happened at 3:15 in London session here. We had a daily that was bearish. We had a 4-hour time frame that was bearish. We had a wick to fill, and I guess that's the wick right here. Oh, I remember this, yeah. We entered here, we got slipped a little, I remember. So some people entered off these lows here. We got slipped, so we entered down here, but we entered up there like normally. The 4 was bearish, had a wick to fill, so the 4 time frame was basically just looking somewhat like this. I'm drawing to the right now. Somewhat like this here, and this one had made a top wick in the whole session here. So we waited for this top wick being created up here, and now we see the candle coming down here. So we break in, or we actually hear something, and then we break in those. We get activated here, and it doesn't run anymore here. It just goes straight back up here. So I think that was good anticipation, maybe a little slightly late to that trade. So if it was a more aggressive entry, maybe you could have entered right here, but I don't really think so that this, I could have done it much better than this. I mean, we already moved, let me see, like from the 4-hour low here, 35 down to, yeah, we already moved like 17 pips from that 4-hour low, but I remember I got slipped like six pips or something. So couldn't really close, didn't really have any targets either. So was really shooting for that CP, but we didn't hit that. So the 4 Wakefield didn't play out in this one, and I think it's a really good loss, this one. I would have liked if we got a candle that looked like, sorry, like this. And then we had the 4 low sitting here, because then we could take it like off of this one with smaller stops. So we had stops above this candle here instead of having it, you know, up here when we're entering down here. So you see what I mean? Like much smaller stops. But we gotta listen to price and what the candle tell us. So just went off current price action and didn't work. We even got a liquidity grab up here, so grab 4 highs. So very unusual, but I think it was a great loss. 24th here, we took a L. So took a loss in this one here. I don't remember, but I don't think it went up after this. But this was the day where we took the overextended breakout in London too. I think it was London, right? 24th. Yeah, at 4 a.m. So 4 a.m., maybe out of volume time, maybe. That was the only thing I would have done better. But I remember we broke this all-time high. Oh, not all-time high. Higher time frame high. And then we begin to move up a little. And then I got activated on the pre-break of the high after making a low here. So we made a low, we shoot it up like 6, 7 pips, maybe 8 pips, and then we went back down. So anything to do better here is maybe just call it a session like the last one. When we're at 4 a.m., you know, overextended breakout. It's good to take overextended breakouts when we have higher time from highs, but yeah, just, you know, call it a session when we ain't really thinking that maybe we were out of volume, you know, after pushing up already and all of that. But I don't think it's a bad trade. I think it was a pretty good trade here. So overextended breakout, lost in that one. Entry of daily and 4 high too. 26 here, yeah, okay, so this is a little wrong. I entered here, but you can almost imagine like entering off the celery here too. A lot of people did that, waited for the celery to play out, and it basically closed above this range here, got the celery, and it was off to the races. So really like this setup here, I took it because we had a high time frame wick. So we had this candle that was breaking out right here. This one down here. So you see this candle here that broke out. This one I'm pointing at now. We closed slightly above, like right at it. So I was like a little like that was a condition for me to size down. So I sized down, but I liked the breakout if we had because the higher time frame was clean. The daily bullish wick to fill for a week bearish. So we were pretty bullish here. 1 hour breakout too. So we had a 1 hour breakout. I mostly went off the 1 hour too, but this is the 15 time frame because I entered off of the 15. So I entered off of the 15 with a bullish candle here, higher time frame high right there, and basically was in this trade for like 30, 40 minutes. And then we got the celery closure above and everything looked good. So when we finally got this closure above here, I was staying in on that candle, this one. And then when we got the second closure above with a wick here, I stayed in too, and I didn't really size up. Maybe that could have been good to size up here, so maybe I would have done that next time on the celery here, keeping very tight stops and basically my whole position out there if you break that low. But that's something I'll do next time. Look very good to size up and very, very good trade. One more overextended breakout too. So we lost on the overextended breakout here, and we won the day after on the exact same setup. So very good. 27th here. So this is the second last trade here, and this was basically taken as a fake out here. So we had the previous range. You see how this is just like coming up here, creating a pullback, and we're going back up at this range here. So we're getting a fake out right here, and this is basically this, and then we're just shooting for a high. So too easy, yeah. It's like range here, got the fake out, this candle, tight stops, 1 to 4 hour, and like retest resistance here. So very, very good setup here. Daily bullish, fall bullish, 1 of support, 30 fake out, 15 breakout. So everything was looking lovely to go up here. This would have been an 8 like plus setup here, and this was one to size up on. This was really good. So very good setup here. 31st, and this was in pre-New York. Took a buy here. Basically almost the same here. We going up. We got a fake out, and we're taking it off the previous high with a small bottom wick though. But this is okay because the 1 hour time frame had already made a low down here, and we were looking like this. We breaking 1 hour highs, so we already have a low. We don't need much low, so we pushed up full target right there and back down. So very good onion slash fake out here, and pre-New York trade, very, very good here. So good trades for the whole month. Let's take a look at my Excel here and basically look at how the month looks in terms of win and losses and break even and all of that, and the trades basically. So when we're looking at this, we can see clearly that a lot of trades were taken at 3 a.m. and we started the month off pretty good with 3 wins here. So my London trades has been at 3 a.m. 3 a.m. We got one at 2 a.m. So we know the pre-London volume comes in at 2, 2:15, and 2:30. So that's our usual like London pre-London volume. Got 3, 3:15. We got 1-4, 1-2. And basically that 4 was a loss. So maybe that's something to look into. This is a loss too, 4:30. So maybe we're saying no trades past 4, because then 2 losses could have been avoided. Then it would have been 10 wins and 3 losses for the whole month. That's something to look into, man. Like it's very, very important actually. Because now we have winners at 2, winners at 2, winners at 2, winner at 3, 3, 3, 3:15. The only 2 losses we had was at 3:30 and 4. No, 4:30 and 4. That's crazy to me. So that's something to look into, for real. Yeah, we gotta do that. I gotta do that, sorry. But it's really good to like journal your trades. That's the power of journaling too. Otherwise, I would have thought like, what time was that trade? What time was this trade? You know. But the power of journaling is really like putting time into getting the trades like journaled like this. Like you see wins, contracts, time frame, how you entered, setup type, buy, sell, gold, NAS, whatever it is, you know. But really looking into the time here, I think, yeah, we had a loss at 2, but we could have stayed 2. Wait, 2. We had these 2 too. So we had 2 losses after 4 and at 4. So 2 losses from London could have been avoided. We would have ended the month with 1 loss. That was the one. We could have ended the month with 2 losses instead of 4. No, sorry, 3. 1 loss instead of 3 in all London session for whole March. That's crazy. So one was the overextended, and one was the and one was the one with ranges, the one with the range to the left that we look at and can say like maybe we should take a look at those ranges, right? Because we were at 4 a.m. too. 4 a.m. We had the not the most decent range. Could we really move up here when we have a weak candle, not so much volume? So it's something to look into. Very good journal here though. Very looking very solid for the month. 10 wins, 5 losses. This is overall like New York, pre-New York, and London. But I think it's looking very good here. Let's take a look at my trade seller here for the month too. And let's end off this video here. So basically my trade seller here started off the month too, as you can see. Nice win here. Actually, I took 2 trades on this day. Gotta look into the trade. Maybe it was a combine the other, so maybe I'm not counting that one with. Yeah, looking very good for the exit phase too. So basically took these trades here, these 2 trades, ended green for the week, took a smaller loss than this one. So basically this trade here and this red trade here was basically like the same here. So I'm keeping the losses quite small or the same size as the win here. But I took a massive win here, so that was really the win for the week, first week. So that was really good. Took a good winner here, a pretty decent loss, like $700. So then I came back the next day because then I had taken 2 losses in a row here. Came back the next day, made a small win. That was just a small winner here, just win 1 contract. I remember that one on my 100K, win 1 contract. And then I went on the last day here, showing a lot of patience. Went like 2, 3, I think, on my aggressive account. Made like 1.4K. So made like 1.4K after getting this loss here, but in between these 2 days here, I didn't even get discouraged because this number was negative 400 for the week. But I thought, let me just wait for the best setup, man. Because if I don't wait for the best setup, I might just lose even more here. Let me just wait for the best of the best. And I showed patience in between the 12th and the 13th and 14th. We got a nice trade Friday. Either this trade was going to put me down the week or this trade was going to take me up again on the week. So I took the bet, but it was a, what do we call it? Like a calculated risk. I love that because we had the odds in our favor, man. So why wouldn't we execute even though it's a Friday? Took a break-even trade here on the 17th. Took a break-even trade here on the 19th. So really no trades in between here. The 20th took a $500 trade here. And I took a little bigger loss here on the 21st on the Friday. So Friday can be good and bad. I haven't really seen anything yet in London. I think it moves pretty well on Friday. So I'm going to stick to that. That's a good day for me. But yeah, ended small red here for the week. And then basically started this day off with a loss here. Made it all back on the first day actually, and made a lot on the next day because then it was time to execute on a very good setup there. So very good setup, executed again after getting back the loss. And yeah, ended the week like plus 850. So took a trade last day of the week here. Oh, last day of the month, sorry. And yeah, that was the last trade you saw there in the document before this one here. So very good way to end off the month. Didn't take any more after that. And yeah, that was the whole March. Made around 2,890 here. So that's the monthly stats for March, and it was looking pretty good with no, we can take a filter here. Let's put it like this here. So the first here, let's get March. Let's just take for the 1st of April. That's fine. So basically, when we're looking at these stats here, we can see that my trades here. So took a dump in this actually, took a little dump in that trade P&L, but made it back up. We have these dips here. It's only over a month here. So I think that was the bigger losses that I had. And this was just a natural one. Like that was a natural one, but made it all back on this one because I wasn't fearful to execute. When I see the edge, we wait patiently 2 or 3 days, like this in between here. It's like no coincidence that we execute with higher risk and an A plus setup, A plus setup, and then we gain it all back. So right there, I saw the dump after taking these like here and here, and then I took this one. So that made it all look better here on P&L wise because it had a very good setup. So I had to risk higher in that one. Made it all back to this, and then we came up, and then we took a few losses. Took 2 losses here. That was these 2 days down here. Oh, the 21st, 24th, and then we begin to go on a run here. So yeah, the end of the month here. Oh yeah, this is the 1st of April. 1st of April. So don't look at this. This is basically the last trade of or the start of the next month. Almost 3K here for the month. Looks pretty good to me. A very, very healthy P&L looking curve. Took a few hits here, so yeah, but really made it all back with that next very, very patient, good A plus setup, and very, very content with that. So overall, the stats here looking pretty good, and the overall month here with the trade seller thing. So stats wise, pretty good. Trade wise, pretty good. We had these few lessons here that we could look more into the ranges and more into the time where we trade. And if we see weak candles at 4, we just step off because that's not really the time to take trades. So very good there. And this journal here is looking pretty damn good. So we had these stats here. We have 10 and 5. 2 of them could have been avoided. Great. So I hope you like this video here. Hope that you like my monthly stats. Could have learned something from it. Could have learned something from the trades I took and from the trades we maybe took together in London. And yeah, I hope this basically gave you some insight here. Hope you can see the power of journaling because this is really important. Like I have 3 different things where or 3 different places where I journal here. I journal here, journal in the document here to see the trade, actual trade. And I have my trade seller here where I also journal like the playbook. I put in here the notes. Don't think I've added them yet. Oh, where's the notes? Not here, but I usually add my chart here, so I gotta put them in too. And for Nick to see because I'm in Menti mode and that stuff. So journaling a lot here, and that's really the power of journaling. Looking back, see where you could have done better. And next month we're gonna kill it. So April, I'll see you, and I'll see you all in London session. Bye.